Kendall Report, where I share my 46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, as they say, better late than never. Had some issues with some of the equipment getting going here, so I'm here. So hopefully you'll see the replay if you pass through the normal time I come live. So Happy New Year, everyone, 2026. I'm actually really looking forward to this year. A lot of things that are going to be happening around the channel, around our community. A lot of things are planned. But as always, every week goes by, I think, well, this week I'm going to get that. It just takes longer to put the puzzle together. So my plan is to start to migrate the channel to some different areas and different delivery mechanism. I've been doing live streams for last couple of years. I'll even say maybe I was a little bit lazy, but it was what I could do at the time. As many of you know, I went through quite a challenging last couple of years and been somewhat throttled back from being fully involved in the business. So we're now getting to that point. I've been talking to you folks about the Discord channel. I'm going to set up a new server. It turns out that the server that we set up is just so messed up, it's going to start from scratch. So those of you that are on that server will get a migration situation so we can do that. And so anyway, sorry, never look at the chat line when you're live, right? So it'll disrupt your pattern. But anyway, yeah, so I'm here. So real quick tonight, what I want to do, since the first of the year, there's a lot of things going on. I titled this, A New World Order. We're seeing some things, maybe because of the midterms coming up this year, that Trump seems to be accelerating, and maybe he's just going to get everything he can get done in the next 6 months. We might see something that we never have seen before with the move into Venezuela. This is a big deal, and I think it's putting on notice. It's really kind of went right into the face of China and Russia and Iran and all these people that have these deals. And you have to think about it as an American. I know some of you are watching are not Americans, but as an American, and I live in a border state. I watched during the Biden years just an influx of things. Even had a threat right at my home. We live in a back up to a big open property behind the house, and I had my wife getting threatened in the middle of the night, literally after midnight, with an intruder in our backyard. So fortunately, nothing bad came out of it. But I've seen a lot of stuff living in Arizona and what's been going on. So Trump is like done with all the drugs. We know the border's shut down. We now know they're going to start taking them out. And they basically put everybody on notice with what happened. Mexico, Colombia, Panama, maybe. It's over. It's game over. You got a massive fleet. Some might call it imperialism. I don't see it that way. I think it's protecting what we're doing. But what does this do? And why am I talking about this on a financial channel? Because what it's doing is reconfiguring how the security of the U.S., if you can get, all the Americas aligned, I wouldn't be surprised to hear Canada come into play again, and maybe Greenland. But, Trump is going to realign this world, and he's doing things in trade and everything. Meanwhile, people are, yelling out that the tariffs are going to cause all these terrible, terrible things, and they haven't. And they're going to continue, and we're going to see a lot of changes. So one of the things I had kind of promised that I'd have my annual report done. It's not done, but it's quite. I have two things going on. I have a kind of a mini ebook that I'm putting out. Those of you that are on Substack, which is kendallreport.substack.com, will get that ebook. It'll be posted, probably come out as in a PDF form. It's gotten quite large. It's not quite done, but it's basically a lesson in market psychology, and it's come out of what I've seen in Bitcoin and those things. So I think it's going to be something that you'll find really, really interesting to read. It'll probably end up, I've been teasing you folks, working on putting something together on a European tour later this year. I'm hoping for it to be in before winter, obviously. I'm hoping at the end of the summer, but it'll be, I'll get that out. It's going to be a master class, and part of this is I have this book. It's going to be about 35, 40 pages. It's part of what's going to evolve into a market psychology section, which is very important to understand. And I would not say that I'm not bragging or anything like that, but I'm very seldom completely in the wrong direction, certainly for any trend, because of the WaveTech database and other elements that evolve around me, since I have a major quant database that I use, which is not a bunch of, I'm not one of those guys drawing trend lines on indexes telling you it broke this trend line and all that. That's real amateur level stuff. What we have is a real institutional shop here that is going to give you some insights with the database, which I'll go through here in a minute. So I wanted to at least come out for you folks and get at least a half hour. We'll probably still I'm going to try to end as close as I can to top of the hour. Like I said, sorry, it got a late start, but it's how things work sometimes. But there's a number of things going on. We already started, the first of the year off to a positive note. And as I mentioned in last night's Substack, there's some things going on that this, as far as the market sentiment is going to continue like we've seen. It's still a bullish underlying sentiment, even though we're seeing the databases and things of that I'll go through here in a minute. So I'm going to fly through a lot of information here as quick as I can. I'm going to, this is one of the switches, and I was hoping to get on this today, but I had a lot of distractions earlier today. But the thing I want to do is go back to the old produced videos. I haven't done one for a while, so the first couple are going to be, I guess, I'm revisiting and getting back some skill sets that I used to have that I haven't used for a while. So they should be like riding a bicycle. But I'm going to do a produced video that's going to keep the nightly videos. I'm not sure they're going to be nightly. I'll come up with a plan. We're going to kind of just work on this transition together. I've spent the last couple of years of my life being a caregiver and working with a family member that my wife that was in the process of dying, which she did pass away last year. And we unfortunately were in that war for 7 years, and I didn't realize until now what a huge distraction that really was. And I do it all over the same way. It's not about that. But I'm going to, I'm 73. Hopefully I'll be here another 15 years. And I'm never going to retire intentionally. I can tell you that. I'm not that guy. I have some big projects that hopefully are going to do things. So sorry just to babble on. I'm kind of all over the place, but I wanted to make sure folks understand what's going on with me. And there's going to be a big transition, including starting a podcast and some other things. So I may be around a lot, but it's going to be on different levels, including kind of an educational situation with, I have multiple products. We have the Substack, which is self-explaining, but we have the indicators, we have WaveTech, we have Portfolio Expert, and I've got this new product coming out with the data sheets that I think is going to change all of your lives, the ones that get involved in this. It's going to be pretty cool. So I see a bunch of Happy New Year's. Happy New Year's to everybody. So let me get set up here. And let's just see if I can get a browser that's going to work. I unfortunately have another project I don't want to eliminate. browsers. So give me just a second. We'll go right to the database and get through this as fast as I can. And everything should be definitely run for tonight. All right, so let's go ahead and get into this. All right, so database has been run. We're at 32.59% bullish, so we're above the 28 number. So what's been happening here, even though we're still printing over 6,900, 6,950 last trade right now on the S&P, the short-term database is only at 32%. There's only there's 10 sectors long though. So even though the number of symbols being held are small, the indexes or the sectors, and these are custom indicators to WaveTech platform, are still showing that we have 10 sectors long. And real quick, let's just take a look at this, and you'll see the sectors. Let me just move these up a little bit. So the sectors are all long. A couple of them are getting long in the tooth, but we have a fair amount of good rotation going on the sector level. So the composites of the way that we compile these, they're different than any of the other sector components you see in the S&P and all that. So I'm not going to explain exactly how they're done right now, but they are different. But there's a few notes here of interest. Right over here where it says current duration, we've got 1, 2, 3, 4, 5, and 6 of these sectors are a little long in the tooth, meaning they've run most of the cycle, but they're still long. So what we'll be watching for is to see if any of these sectors start to peel off, but they're not likely to do that with the way the configuration is. So let's take a quick look at the weekly. So weekly is still at 56.86, and the big marker is 42% bullish. We've got plenty of traction here. And meanwhile, most of these indicators and this is something that I will discuss in the annual outlook that has not been completed just yet. Just so you know, I was about to tell you what is going on there, but I did. It's like this is going to be the American Century Part 2, and this is what Trump is setting up right now is very, very big and very, very bullish. Just a very long-term switch, not just in America, but on the planet, of what's likely to happen. We're already seeing a lot of benefits, and I'll get in when I release the annual report. We'll do a special broadcast just going through the elements. Once you folks have had it, I'll go through and kind of read between the lines and whatever when that thing is done. So I'm anxious to get that out to you. It's just a lot more work than these projects are always bigger than you think, and I've just had, like I said, some distractions that were necessary. But the whole sector configuration here, there is really nothing in here now that is long in the tooth, meaning like what I was talking about on the dailies. There's nothing long where it's getting extended. Most of these are maybe 20% into their marker. If I go over to the all stats, you'll kind of get a feel for it here. See if I can break that out for you. So on the optimized weekly over here, you can see typical holding period on these positions are 206. Right now, at 60. Let me just make sure I got the right numbers here. Yeah, so where they are right now is they're only about, there's 62% is the normal. Right now, we're only 31% of the cycle realized. Now, it never gets to 100. It'll get to somewhere between 68 and, well, 78% is typical duration. So what that means, we're maybe halfway through that duration. So you can see right now on the days, we're only 67 days into the average cycle on these models. So most of them are looking for that 206 number. So we're a long ways from this particular trend being over. And I know, I didn't get a chance to see I was considering going to the CES. I'm about 4 hours away on a car drive, 4.5 to get to Vegas. So it's not a very big deal, but it just didn't work out. But Jensen Huang was on the CES. I haven't had a chance to look at it, but if you're playing on a some kind of AI bubble, you're not going to be very satisfied for that. Not to say that the AI stocks can't take a rotation, correction, all that. I'm not saying that. The overall business cycle, the overall cycle of America with CapEx and everything that's happening is just impossible to ignore. And, so more on this once I get the report out. But this is kind of where the configuration is from that level. So let's go ahead and let's get into the, this is a weekly chart on, sorry about that, a weekly chart on S&P here. And I talked about this, but look at the angle of attack. The dots are the indicators, which are the WTAR, which are predicting where the indicators are going to be in the future. This is 50 weeks in advance. So this is like the next year. It's projecting a peak somewhere in June. That's exactly what the database is telling us. We'll see as we go through this, these numbers are going to change. All of this stuff is going to change as we get more data and we can calculate and project out. But for the most part, this is the argument with the database, what it's saying on an intermediate level. We've got maybe anywhere from 120 and 180 days, which is roughly better part of between 6 months and 3/4 of a year, right? So 6 to 8 months out in the future. This can all change. All it takes is some rotation, database changes. We get maybe a correction comes in. All I'm saying, at the moment, this is what the projection looks like. And you can see one of the things I talked about, I'm going to go really quick here to get through this, but this, what I call that continuation pattern on the trends. And I talked about this. If you've been a fan of this channel, then you know that I've been talking about this continuation pattern. Let me just draw it in real quick and we'll review it. It's the same for the NASDAQ. And I think I tweeted out something, we're getting that curve, the yield curve is starting to actually steepen, which could bring in the small caps, the Russell there. And I'm not going to touch on that much. That will be in the annual report and conditions that need to fire to make that happen. But let me draw something in real quick. Oh, bear with me something here real quick. All right, so this is the pattern I'm talking about right here. This is where the indicators, this is part of the WaveTech suite, these indicators get this boost of momentum and they lag each other in how they get at different points. So where we are right now is where I call, if you folks have heard my half pipe, where momentum, when you're launching off the low, this is way over here back in July. Our second phase is over here, which is the confirmation of the trend. And this third phase is coming in pretty much where we are right now. And then let me take a couple off here. Those are the points to watch. Then we get this downslope. It looks like, hey, the indicators are turning negative when actually what they're doing is they're stabilizing the trend. And then they go flat. And each one does this little angle. I first introduced those of you who've been around back in pandemic 2020, 2021, we talked a lot about this. So what happens is this is a sustained trend. This is how these look in a sustained trend. And that's looking all the way out into that June, July, which is what the database is telling us. So we have confirmation of at least a point to watch as we go forward. So we'll make sure that I'll update that as things change. But the way it's projecting right now, this is like Goldilocks. It's just right. Not too much momentum. We got peak momentum earlier in this cycle when we came off this low, going all the way back into 2025 after the April debacle of last year. And now we're in this steady trend. So it looks like we can run this out. I've been talking also about the potential. This is a weekly chart we're looking at right now. I've been talking about the potential for the market to be over, if we look out long term, that we get maybe 5 years, 8 years of double-digit returns. I know this maybe sounds crazy. That doesn't mean it's a straight line, but it means that the annual returns are going to be sustainable here, and that's partially because of CapEx, partially because of the realignment of the markets, everything. Like I said, I'm trying not to reveal the annual report, but I'll tell you that much right now. But this configuration exists on the NASDAQ, and it does not, it's a different pattern in the small caps yet. And I'll just kind of combine stuff. I've been screaming for 2 years about the steepening yield curve, and we need to be much lower. So I think we probably get another drop, another quarter point, and then maybe another quarter after that. I want Fed funds. I want the short end of the market. Don't care about the 2 year. I care about the Fed funds and the 1 year notes. This is where this needs to happen, where we get down to 3.25 on that very front end, maybe 3%. 275 would be perfect, actually. And then maybe the back end of the curve will come down. But what we're looking for is 100 to 125 to a peak, maybe of 175 basis points over the 1 year, so the 1 year T-bills, and the 13-week will come in here as well. But those metrics of what I want to see, that 175 to the long end. So maybe we could print the long end down to 3.25, something like that. I won't go through that right now. It looks like we're still locked 375, 4.25 on the back end of the curve. And people have been talking about the spread between the 2 and 20 or 2 and 30 year. That's really not relevant. Those are just people looking at numbers and trying to make a story up. That has nothing to do in real terms from institutional bank alignment, okay? Having dealt with hedge desk and proprietary organizations as far as the bank-owned portfolio, I spent about 8-9 years just consulting that group, and the way that the banks look at things internally are not the way that most of the, I'll say, backseat economists are equating the 2 year. 2 years are popular to talk about because, and I told you when it was inverted, it wouldn't cause a recession. And, so many people have missed out on returns in the markets because they've been influenced by a bunch of pseudo analysts that have probably never even been in a trading room. they've looked at charts on TradingView and think they're an expert and drew a few trend lines. But the bottom line is there's a lot of elements from having been an institutional rep and worked behind the scenes on the banks and hedging desk and all that. I've seen the world from a little different angle and how the banks think more than anything. So that's important to understand. But just know that because I'm going to flash up the NASDAQ and the Russell. We're going to hit on the metals briefly. Where am I at on time? Yeah, so we're going to run a few minutes over, but we've got pretty good participation on the screen right now. So I'll run this out a bit, but just know that on a large scale and looking at from higher, we'll call it from the 30,000 foot level, we're not going to go out and look at the whole globe, but just as a 30,000 foot, U.S. markets are really in position well, as you can see this angle of attack. Everything is confirmed. Does that mean we can't have a 5, 7, 10% correction? No, not at all. We have lots of volatility and a lot of emotion that can come in at any moment. If you watch Bloomberg, has total Bloomberg's entire schedule. What's interesting, during market hours, they have a political show on for like 2 hours during market hours. It's unbelievable that they think that's what's important, and it's all TDS stuff. And it's just like they just bring one guest after another that somehow can discredit what Trump's doing to try to make him wrong, and it's laughable if you watch it. I have the sound off most of the time. There is a lot of quotes that come up on the Bloomberg TV that is kind of nice to get little snapshots of during the day. But just from perspective, but keep the sound off, you're much better. I forget what they call that show. But anyway, this is where we are from the standpoint of trending as far as any kind of continuation that will go on in the markets. It looks really solid to be right now. I don't see any cracks. Even the short-term data base is staying above key metrics there. So we'll kind of go forward. So let me throw up a let me just get rid of a couple of things here. Okay, so let's go ahead and do the NASDAQ real quick. And you'll see this is just weekly. So I'm not doing NASDAQ looks a little weaker. This is interesting. That would actually make sense if we get a secondary rotation that the S&P is actually going to become the leader, not the NASDAQ. So as you folks should know by now, I did not review these charts. This analysis is kind of willy-nilly as you're seeing them, I'm seeing them. So this downward projections here all the way down to 200, we're looking at 20,620, and we're seeing kind of a flat mode. Not at all. Let me bring it into this mode here. You still have more flat, and then after, let's say, looks like as we come into April, there's a potential. What the forecast is right now, this is going to change quite a bit depending on what kind of prices we get. If we come up here, you are not really seeing, you still have that continuation. So we're probably going to see maybe a switch of rotation, meaning a little broader index from the standpoint of going to the S&P. That's where it looks like we're going to flatten out. Not great momentum, but enough momentum underneath. If there's any correction, it'll still be by the dip as far as it goes from that standpoint. This is still a positive market. And let me just see what kind of numbers these are. Yeah, we are potentially going to get some negative, but we're at a bottom rotation. So here's your key. I'm staying with weekly tonight. The weekly charts, the 21-week average right now, 24,938 is going to be the key support. That's a buy a dip number if you see it. And we'll see how some of the market sets up as we go through the rest of this, starting the first month of the year. There's a whole bunch of cliches as January goes, so does the market, all that. That stuff really doesn't matter. Seasonality really doesn't matter. We're living in a much different world, especially as we're seeing the global map of everything, oil, financials, everything getting reconstructed in real time right in front of our face. So there's a lot to pay attention to. And, we've got, I didn't mention earlier, but we got a lot of metrics coming out. So once again, go to kindlereport.substack.com. And I would also suggest, for you, just do a quick advertisement here, is that you want to get the indicators. They're still on sale for, I think, almost 60% off. So you can go to kindlereport.com/indicators24. Indicators plural should get you to the right place. And then Substack, get on there. You're going to get all these special reports and things I'm doing. This report, this view from 4 decades, I'm really happy with how this coming out. Thought I'd have it done last night, so I'm juggling a lot of different projects at the moment. But it's all coming. You're going to love it, I'm sure. So let's get back to the analysis. Let's go ahead and just take a quick look at gold. I know folks were pretty pumped up on gold, like it's coming back, but it's really kind of getting a little tired. But I want to show you just right now what the forecast angle of attack. I've been showing you this since this was where we were last year. We have no fib targets. We got crazy momentum, underlying momentum. Also that trend maintenance mode that I was just talking about, where we get this boost. See my cursor here. Let me not leave your eyes to wander. Let me just put this up on screen here. So this is what I'm talking about. All of these moving averages are the angle of attack, and this is the trend maintenance mode. This is exactly what I was talking about on the other charts. So these are all, this is a giant trend. Worst case is going to happen is we get some consolidation. The red dot indicator, which I'll blow up and show you, this is predictions where the closes. So the closes are being predicted to stay above the 10, this is weekly again, 10-week moving average. So we're going to stay above there. Any value down to the 10-week simple is a buy. Okay, so you're going to continue to bounce off this level, mainly because of what I'm showing you here is this trend maintenance level that's out there. So make sure you know that this is a huge weekly trend. Like I said, I'm going to stay with the weeklies. I have to do silver because everybody's on silver big time. What I'm seeing right now, let me clean this up real quick before I move on. What I'm seeing right now, as far as this goes, sorry, this tool is what I'm seeing right now is we've got downward shape here. We should get more of a volatility. We should stay above the 10, but everything is focused on this pattern here. And I mentioned the 10-week. We came close to it a couple last week on that big reversal. And the typical formation that comes out of this pattern here is we get this big downward reversal. We actually got what's called an STX buy signal, which is pretty reliable. Typically, you'll get 1 to 2 weeks of sideways movement. You'll stay within the grid. And the beauty of this grid, you can go through it. Those of you that have the indicator, as it's approximately 12% of the time is when you get anything that looks like where it will go outside either side, up or down of the actual grid. Normally we'll trade within it. Makes for some great, what we call STX, RTX, STX buys and RTX sells. You can trade that range it's very reliable. I mean, you got 90% of the time, let's just round it off and be realistic, that it's going to stay within a grid. And this grid comes out, first tick on the day, as soon as you know what it was. I was talking to a user of our software earlier today, and on the WaveTech indicators, you could put another market grid up, and you could make the market grid show the outer bounds. You can choose any field to project out in the future. So you could do the gold bar, the extremes, the STX, RTX. You could project those out and see where the ranges are being projected to. So I never show that. It's intriguing to look at, but I've done it, and it's worthy. I think there's just, for doing a live streamer, trying to tell you folks what's going on, it's too much. But those of you who have the indicators, if you go, you can see, you can pick any field out there. So, so take a look at that, because you can start to expect, you can see the channel that's likely to unfold, as well as just the moving averages. So it's pretty interesting to look at. So just a little side note. All right, let's do Bitcoin. I think you folks will find this interesting. I know Bitcoin community is pretty excited. We traded to 94. We're trading right at there, 93.7. And this is kind of interesting. I didn't see this earlier. Check this out. Folks will be excited to see these numbers. We have some new fib targets on the upside. Love this. Tom Lee will be happy. Check it out. 132, 152, 164. And we have some positive, the PPMs are being projected to be positive. So after, it's kind of interesting, a couple levels here. As I remember telling you folks, we'll zoom in. We basically came pretty close to these levels here. Let me just get a number on that. So 77,000, I've been telling you 83,800 was the key support level. So we're back over the 10-period moving average, and just bringing this in a little bit. Down here on this indicator, you see there's positive projection. These are weekly charts, okay? So these numbers, let me get a date for you. Looking into roughly March, we've got a little bit of positive bias potentially into March. Are they going to make the new high? Is this going to happen? We'll see. But this level held pretty solid. And as I was telling you, if we hold 83,800, then we've got a shot at a little bottom here. Here's a little bit of a warning. There is going to be, obviously, like always, it's not going to be a straight line. But this is what I believe we're probably looking at. See if I can get this to come back up again. Bear with me. So this is going to be the areas you're going to want to watch. We're going to see the market grid, this right here, this wedge of prices, this downward projected 21, which has a pretty heavy number. So this is going to be your resistance line, which I checked earlier. It's around between 99 and 103, 104. I'll bring, when I'm in this mode, I can't get to the numbers. And on the downside, we're looking here around 80, 88, 87. I'll bring up the actual numbers. On a bigger scale, this could be really what we're going to get locked into. So there is still a material risk of this retracement doing this. So I know that Bitcoiners want to go yay. So we got a pretty mixed picture, and we're not going to know the answer until probably as we come into February, March. But right now, positive tone as we move forward. We should stay at least above this 10 period moving average, but below this 21. Let me get rid of this stuff so I can give you some numbers that you can operate, and then we'll wrap it up for today. All right, so PPM-wise, everything except for the longer-term moving average, which is 108. So that number is 99 to 103 upward potential target. And then on the downside, we're actually looking at 91,638. So as we come to where we are right now at 94, what's the last trade? Hang on. Yeah, we're trading 93.7. So that 91,600 is going to be the point that you're going to want to keep. We have to stay above that, or we could rotate back down because there's still live fibs on the downside back at 77. I don't think it doesn't look like we're going to get that at the moment, but I think we'll see that 99,102 level. So be careful there. I think that's where the rotation is probably going to happen at the moment. I don't think we're going to scream off. Tom Lee is back throwing out 250 again. Guy's very annoying to me. I don't know why anyone would listen to him. But I need to get this document. I'll just come back on screen. We're going to finish right here. But this is the rough document, a view from 4 decades. I need to get this out to you because it has a lesson in market psychology. And we're seeing some things that we may not. Reason why I wrote this, it started as an idea 5 or 6 days ago, and it's evolved into like a mini book. But that's okay. So I'm going to put it out in a PDF form. But the realities are we're seeing something. There's a lesson that's coming in right now that we may not get an opportunity to see for a while again. And it's going to be interesting to see how the psychology of everything plays out. I get really concerned. I mean, I've never seen as much, I guess, all these billionaires that are advertising their positions. Like I even saw the Eric Trump out, going, we've got 5,400 and some Bitcoins, and they just bought another 30 million or whatever. I've never seen people advertise what they're doing so much. And I'll let this mini book tell you the story on what I think is happening and what it might mean for the future. But I've never seen so much advertising of your book by big players, reasonably good players. Sailor and some of these other characters are key. And anyway, I got to get this out because then I can talk to you about it once you've had a chance to spend probably a couple hours reading this thing. And it's more of a workbook than anything else. So anyway, folks, sorry for being late. I got 44 minutes. I got through a lot of information. Let me just see if there's any. I'll do a couple questions like I usually do. Yeah, hey Gilly, I see. Send me info at Kendall Report. Send me an email on some of this stuff because it's going through these comments on the live streamer. So yeah. Oh, okay. Cernovich is on. Yeah, that's interesting with Tucker. Yeah. Hey, Todd, you're right. Katie Hobbs is owned by the cartels. She's soon to be history, I'm pretty sure. They can clean up so they can't cook the books. We'll be good there. Yeah, somebody says melt up. Yeah, I think there's definitely, I showed the uptrend that's definitely in place. Melt up is certainly possible. Um, yeah, somebody's saying politics opinions are best to be unspoken. Depends. I don't think so. Um, I guess if you're a Democrat, you're probably right. Okay, let's see here. Yeah, Gilly, make sure you send something to me. I don't know who these people are. Um, Let me just look here. Yeah, okay, so yeah, I want to talk about this White Andrew. White's White Shad, yeah, whatever it is, whatever you are, you guys have your usernames. So there's no injection of $5 trillion coming. This I did a couple tweets. If you look at my replies, I've tweeted back on this whole repo, this injection. Some bank got $34 billion. This is rounding error, folks. You look at the size of the banking system. Besides that, they're repos. If you know what repos are, those are temporary injections of money. A lot of things happen at year end. I saw a lot of corporate transactions drain money. They're just filling that gap until everything settles. They go to the window and they get the money. It doesn't mean there's any liquidity crush. You have to understand the people that are saying these things, and I've seen some of them, their backgrounds, they have no clue. And if it gets them clicks, they're going to say it. I mean, this is just social media noise. I mean, these are real amateur folks that have no clue what they're talking about. And, if you buy into that, it's to create anxiety, it's clicks. They're telling you to buy whatever, they're telling you something, and they're making that narrative into something that it is not. Those folks who've been around this channel for a while know that when the Silicon Bank collapsed, I was on Mario Naval's Spaces, and 15 minutes I was speaking on that podcast 15 minutes before the Fed came in and did all the repos and just added some money to fix the Silicon Bank. I had just told everybody all they got to do is this. It's a small dislocation of capital. It's a tiny bank in the big scheme of things, and it was not a banking crisis. What happened? No banking crisis. No 2008 banking crisis. Revisited. Everybody was going crazy on this thing, and it was not the case. And it was very simple fix when they open that discount window open. That's what the Fed is there for, folks. So the reason when people, and $5 trillion, what for? You got an economy that's putting 4.1%. So anybody telling you that, just tune out. Never watch those people again. They have no clue. They're just trying to hype something. And that's what I'm talking about. No offense, not trying to offend the millennials, but most of them are millennial influencers. And, not that I have everything right, but I've actually worked within the banking system. I've worked on big desks, and I've consulted about 30 of the largest banks on the planet for like 6 years. Okay, I mean, there was a time Credit Suisse, First Boston, I actually I spoke in front of the proprietary room on a regular basis. They all read. I used to have something called a fixed income, a daily quant fixed income report, which was read by all the large banks in the big rooms. And I had a fair presence in a number of banks back in those days. And so just know that stuff is BS. And, that's not what's going on. The Fed lowering rates right now is still trying to achieve the goal they should have achieved probably a year plus ago, was this of steepening the yield curve, which I'm still screaming about. All they had to do is like three, do 50 basis points quarter, skip some, another 50, and they would have had that yield curve inverted, which was very healthy for the banking system. I don't see any issues. You got CapEx coming, crazy money coming to this country in the next couple of years. If half of the money that Trump is bragging about shows up and half the money that's promised shows up, I was saying to somebody earlier today, it is virtually impossible to do anything about projecting some kind of recession right now. That's just, and you don't hear anybody talking about it. You hear the guys I've just talking about, those influencers, and they're telling you all this stuff, and they don't know anything about what's going on. And like I said, the CapEx, some of the things that are going on are huge, and AI is just this year. Scott Bessett was talking about this on an interview the other day, is that, and it was almost echoing exactly what I've been telling you folks for a while, but we're not going to see the real effects of AI. I said last year, and is that you're going to see 25 its start, and then 26, by mid 26 and coming into 27, place is going to be on fire with efficiency and things that we're all going to be able to do that we couldn't do before. The amount of work that I do and research that I do and verification, because you still got to check things out, right? As it is so expansive of what I could have ever dreamed about doing. So especially working on this annual report has been really, really eye-opening. I built a dashboard for it. I'm making sure that there's a link to it. I'm going to publish it on Claude so everybody can look at it. But I've got a couple of these. I've got one more to build. The reason why the report's not out is more of the content to support what I'm saying and some dashboards with variables that you can play with these models that I built. So I think it's going to be a lot of fun when I get this thing out on the street. But there's probably 2 dashboards that will be out there, key metrics that we all need to watch, and you just need to save it in a browser somewhere, and you'll always be able to go back and you can change the metrics maybe as they change and those kind of things. So that was a good question, though. Thanks for that. I was calling for the S&P to... No, I wasn't. I didn't call for it. I said if it broke that low in April, that would be the case. And okay, so I wasn't. If you look at our database, we were long before that, and I don't think you're right about that at all. The database turned substantially. So those of you that don't use our management tool, we manage $15 billion. I wouldn't have any customers if this guy was right. So anyway, yeah, be careful with the clueless stage. Yeah, I think you're the coolest one. So yeah, we had a wonderful year. We had portfolios up over 40% last year. So yeah, it's like you'll take one comment and then say that's what I was calling for. Yeah. Anyway, I don't want to argue with you. You've been around the channel for a while, and you occasionally are like to try to play me out. You can't do it because I know too much. I actually run money. So. I didn't choose to ignore it because we actually, like I said, we actually run real money, sir. So you can try to. I didn't ignore it. There were times where we're coming up into the moving averages that I was cautious there, but that was just talking. We always follow our discipline, so just know that. You should get WaveTech. So maybe you do. That's okay. Anyway, I don't want to dispute that. There's no point in it. Yeah, mini book will probably be a link that will take you to Substack to get to the data. Let me just see. Yeah, that's interesting. Now, those of you, let's see, is that public? A couple years ago, there was, I want to say it was 22 when this thing started. XLE was a place where you could go, excuse me. It was a place you could, that I made a big play. It was the most obvious oil play. I'll revisit that. I appreciate you bringing that up, Iron Trader. Yeah. Just reading a couple more comments and we'll call it quits. Yeah, it's probably Texas Dave. We're probably a good time to be selling into that CVX thing. It might be more. Yeah, I mean, I'm just looking at it on a weekly basis. It's probably peaked out, but with some of this emotion around this Venezuela thing, you might get some more. I'm just seeing a couple more. Yeah, I did say that at the time, that was the right thing about that downtrend. You guys, I love, I come up here for free every day, and you guys want to troll me. That's really nice. Don't show up if you don't like what I say, please. Yeah, I'm just looking at somebody who's talking about could you refresh on the use of ER in deciding to act on a wave text signal? Yeah, I believe, I wish I could find some of this stuff um, just to kind of bring that up. That's a good point. One of the plans is to get more in depth on some of the other products and stuff. Since I'm only one of my ex-wives used to always say to me, "Bob, I'm only one person." So I'll try to get that. I'll try to get that. Are you going to give up, or do you just want to be right? I seriously, dude, give it up. Okay, you're right. Do you feel better? Oh my God. Yeah. Well, okay, so I said it. Did I change my mind? So I was 30. Was it 30%? I don't know. I don't think that's when we started buying. You know, if those were very. Yeah, I don't know exactly when you're talking about. You win. Yeah. So yeah, I, I guess in reading this stuff. Um, yeah. So, yeah, so I'll throw some. It kind of upsets me because maybe I did say that, but if you would have seen what was going on behind the scenes or whatever, I don't know. But last year was a shit show for my life. So, I'm not even going to fight what I might have said on 1 hour long, whatever. Maybe I said it for weeks. I don't. I remember that the patterns were still vulnerable, even though, you can look back in hindsight and say all of that. What I do know is what we manage and what we do, and it's all individual symbols. For the most part, we don't touch ETFs or anything like that. So anyway, but I appreciate it. We'll let it go. Yeah, so here I am, 7:40, almost 9 o'clock, my local time, sitting here. So listen, I'm going to change, like I said, I want to go back to the produced videos and all that. It's nice to hang out with you guys, but this is a long time for all of us to spend. I just finished an hour, so I did my normal broadcast. But yeah, listen, the best thing, so here's something I'm going to tell you folks while we're at this point. We still have a couple hundred people hanging around. I am working on a script right now that if you get Claude, you're going to be able to, if you have my indicators, I'm basically putting a TSX file together that all you have to do is do a screenshot of the indicators, and I'll tell you which ones to put on. I'll do a video for it, and it will actually do all the PPM analysis and everything for you and tell you any triggers. Just like, let me see if I can find something here. Bear with me one second. Okay, good. Let me go back on the screen for a second here. So just like this screen right here, I'm going to generate a new sheet, which is, will do something similar to what this sheet does. This actually what gets input to this is, let me show you, go back over. Here's CVX, but this is all the indicators. To generate that sheet, you just have to go over here and you highlight and then do a copy and then a paste into that sheet. So you're gonna be able to do the same thing, only it's going to be a screenshot, and it's going to look at the PPMs. It's going to look at the future forecast. I've already started on this project, and anybody that has the indicators or buys the indicators will get probably a couple scripts that ultimately will do a couple things. It will give you some kind of data sheet like that, output dashboard of exactly actions to take or how to interpret the PPMs. One of the big things is interpreting the PPMs. If you have them, there's a lot of questions that come up. So my goal is to have these scripts. You're going to have Claude. Ultimately, I'm going to put them into this other platform that I'm putting together, and you'll just be able to dump them in there, and you can use my API or your API on Claude. But once you dump it in there, it's just going to spit out this data sheet, actions, understanding. I actually built in here one of the models. There's a couple more things I have to test the signals on, but I basically have built our 1.2 model into TradingView. I've figured out how to get around a couple workarounds with some data that I needed to calculate. I found a way to do that in the script, and it's pretty accurate. So ultimately, I'm going to get all these signals so you can run them on TradingView. And a couple of things that are likely to happen. I've got some sponsors that want to sponsor me, and one of them potentially is Interactive Brokers, and I'm pretty excited about our conversation so far. So I'm just looking at bringing in so we can actually bring them in, use TradingView as a model, and you'll be able to trade off of that and pass your trades right into a broker-dealer, which I think is going to be really sweet. I've been wanting something like that for a long time. So working on a whole lot of stuff, okay? And the good news, just on this conversation, I was talking about 2,900 at one stage. There was some serious risk out there, and anybody that's around then knows it. But the reality is, anything I ever do, I'm not going to have a point in time where I'm just completely backwards and I'm going to go down. My trading activity would prove that as well. Anyway, folks, thanks again for hanging out. I appreciate it. I really do. And you're likely to see me on a 12 or 20-minute video tomorrow that it will describe the markets and go through some things and start to move this channel more to a focus. So, while a lot of you folks have good commentary, this channel did the best when I was doing the 12, 20 minutes. You could evaluate, make comments on the videos themselves. And the live streams are fun and interactive. And I'm still going to do intermittent live streams over time. I'm not going to end them, but I am going to, change the time so I don't get in here like I don't know, do we all have an hour every day? Probably not. I've been doing it because it'd probably take me as long or a little bit longer at first till I get my chops back on editing videos. But anyway, I'm going to put this out. We still have 157 people. If you are really even have a Discord or you know how to set up a lot of the things in Discord, if you're interested in working with me on that project, then what I would ask is if you can email me at info@kindlereport.com, because there's a number of things I want to work with the community, and I'll make sure there's plenty of good benefits if you come to the party. So if you have those skills, let me know. And because there's some things I'm looking to do, even putting some bots together and some other things that I want to put together for Discord. Anyway, once again, thanks again for watching and participating and keeping me honest. How's that sound? Yeah, somebody's saying just real quick in final closing is that maybe a live stream once a week or something be good. Yeah, that's how I used to do. I used to do and I'm not even sure the videos are going to be daily. I may set up a week. We'll see what happens. What I need is what you guys really want me to do is when I'm in the laboratory to get out there and get these new products done. That's going to enhance you. The educational videos that I plan on doing, I'm going to update all the indicator videos because I don't think they were very good, to be quite honest. They were kind of slapped together in the day. So all of those need to be redone, and I'm going to do all that. And that's just going to take some time to work through. And especially I'm planning probably at least 6 weeks in Europe late summer. So, and I'm planning on keeping some of the content going during that time. We'll see how it goes when I'm on the road. And I'm looking forward to it. I'm looking forward to meeting a lot of folks. Anyway, see you soon. Tomorrow could be me live or could be a produced video. We'll see what happens. Take care and have a great evening.